All you need to understand the market in a nutshell. This is Deep Dive Finance by N3WS.
All right. Welcome back, everybody. We're diving into some pretty interesting stuff today, tech and finance. Lots of headlines swirling around, so we're going to unpack them and see what we can learn.
Yeah, it's all connected, too. We're going to look at Meta's latest round of layoffs, Netflix, and how their stock is performing, a big move by the European Central Bank, and even what's going on with this one semiconductor company's earnings.
Okay, so let's start with Meta. Fortune, TechCrunch, everybody's talking about these layoffs, right? And it seems like this is coming after they already made some pretty substantial cuts earlier this year. What's the deal?
Right. It makes you wonder if there's something more going on here. I mean, these are engineers, people in monetization roles, these are key positions, and you got to remember, they're calling this an efficiency drive.
Yeah, we hear that term a lot these days.
It's partly for investors, of course, but it also might be a sign of some bigger strategy shifts happening behind the scenes. Are they shifting resources to focus on specific products, maybe going all in on the metaverse?
So you're saying it's not just about cutting costs, but also about deciding where that money goes next.
Exactly. And you know what else is interesting? The timing of all this.
How so?
Well, think about it. They had those big layoffs, and now this. It could be a sign that whatever they're trying to do, it's not going as smoothly as they hoped. Or maybe it's a preemptive move to appease investors before they release some big news or earnings report.
Interesting. So it's not as simple as just looking at the number of people being laid off.
Right.
We got to dig deeper into the why behind it all.
Exactly. And speaking of things not being so simple, Netflix. MarketWatch can't stop talking about their stock dipping below that 50-day moving average, which, might sound like a bunch of jargon.
Yeah, not everyone's glued to stock charts like some of us.
Right. But basically, it means investors are starting to get a little nervous. And this is all happening right before Netflix has their big earnings call next week.
When they tell everyone how much money they made, or, well, didn't make, last quarter.
Exactly. And there are a lot of factors at play here. Subscriber growth has been a challenge for them. The competition is only getting fiercer in the streaming world. And then you've got the Hollywood strikes still going on, which throws another wrench into things.
It's like a perfect storm brewing.
Investors are going to be watching very closely to see what Netflix's content strategy is going forward. Especially with these strikes, are they going to lean even harder into international productions? Are they going to change their release schedule? Lots of questions.
Okay, so we've got Meta potentially shaking things up, Netflix facing some uncertainty. Let's hop across the pond for a second. What about this big decision from the European Central Bank?
Oh, you mean their interest rate cut?
Yeah. That seems like kind of a big deal.
It is. They just slashed interest rates again. This is the second cut in a row, which is pretty significant.
So what does it mean? Are they trying to jumpstart the economy or what?
It's definitely a move to try and stimulate things. The Eurozone's economy hasn't been growing as fast as they'd like.
So they're trying to give things a little push.
Right. The idea is that by making it cheaper to borrow money, well, businesses are more likely to invest, consumers are more likely to spend, and hopefully that gets the economy moving in the right direction.
Makes sense. But there's got to be a downside, right?
There always is. It's a bit of a balancing act, really.
Yeah.
The big risk here is inflation.
Because when everyone's spending more, prices tend to go up.
Exactly. And if inflation gets out of control, well, that can hurt everybody, especially people living on fixed incomes.
So the ECB is walking a tightrope here.
They are, trying to stimulate growth without letting inflation run wild. It'll be really interesting to see how this all plays out in the coming months.
Yeah, high stakes for sure. Okay, enough doom and gloom for one day. Let's talk about something a little more positive. What's the deal with this semiconductor company everyone's talking about?
You must mean TSMC. Taiwan's semiconductor manufacturing company. They just released their latest earnings report, and let me tell you, they are killing it. Profits are through the roof.
Why are they doing so well? What's so special about them?
2 words, AI chips.
AI chips.
TSMC is one of the biggest suppliers of the chips that power artificial intelligence. Think about it. Chatbots, self-driving cars, all that cool stuff.
Oh, right. It's all powered by those little chips.
Exactly. And TSMC is the company making them. So as you can imagine, with all the hype around AI these days, demand is going through the roof.
Makes sense. So they're riding that AI wave.
Big time. They're in the perfect position to capitalize on what might be the biggest tech trend in decades.
Wow. Okay, so we've got Meta potentially switching things up.
Yeah.
Netflix with that cloud of uncertainty hanging over their heads. The ECB trying to walk that economic tightrope. And now TSMC crushing it thanks to AI.
It's almost like a snapshot of the global economy right now, isn't it? All these different forces at play.
Totally. So how does it all connect? It really is fascinating. We've got Meta restructuring, Netflix sweating it out, the ECB taking a gamble, and TSMC hitting the AI jackpot. It's a wild world out there.
And it shows just how interconnected everything is, right? The global economy, technological innovation, investor sentiment, they all influence each other in ways we don't always see right away.
Exactly. It's not just about what's happening in Silicon Valley or on Wall Street. This stuff has real-world implications for everyone.
Absolutely. Think about the decisions being made at a company like Meta. Those could end up shaping the entire social media landscape, which impacts how we consume information, how we connect with each other.
Right. Or TSMC's success with those AI chips.
Yeah.
That can determine how quickly we see advancements in everything from healthcare to transportation. It's huge.
Exactly. And then you have something like the ECB's rate cut. That could influence global interest rates, which could affect everything from mortgages to investment strategies.
Wow. When you lay it all out like that, it's kind of mind-blowing.
It is. We're living in a really dynamic time, and I think that's what makes it so important to try and understand these forces at play, to stay informed and be adaptable.
I totally agree. So as we wrap up today's deep dive, let's recap what we've learned, shall we? We talked about Meta's strategic shifts, the uncertainties surrounding Netflix as they head into their earnings call, the ECB's bold move to cut interest rates, and of course, TSMC's incredible success in the booming AI chip market.
Each story giving us a glimpse into the complex and interconnected forces shaping our world.
For sure. And as always, we want to leave you with something to think about. We've talked about these big trends, but the real question is, how might these shifts in the worlds of tech, finance, and global economics impact your world? Your job, your investments, your future? It's something to ponder. Until next time, stay curious and keep diving deep.